Thanks for joining us now. Here are some of the reports we're filing at this time. I am Frank Omalape. We'll begin from the Federal Capital Territory, where the federal government on Wednesday said it was currently engaging on marketers on issues bordering on the cost of premium motor spirit, popularly called petrol, fuel queues and bridging claims payment, among others, and the downstream oil sector. It was reliably gathered that the meeting might lead to an upward adjustment in the pump price of petrol, as oil marketers had repeatedly blamed the persistent fuel queues in various parts of Nigeria on the unsustainable cost of PMS. This came as the Major Oil Marketers Association of Nigeria on Wednesday joined their counterparts in the Independent Petroleum Marketers Association of Nigeria and the Natural Oil and Gas Suppliers Association to call on the government to gradually raise the price of PMS. Ipman and Ugasa had earlier pushed for the upward review of petrol price, as some members of Ipman had already affected this by selling above the 165 naira per litre government-approved price. Some of them currently dispense petrol at 180 naira per litre and above in many states, including Abuja, Lagos, Ogun, Imo, and Niger State, among others. When informed on Wednesday about the demands of the various marketers groups, the General Manager, Corporate Communications Department of Nigerian Mainstream and Downstream Regulatory Authority, Kimchi Apollo, said that the government was currently engaging the oil dealers. Away from there now, the International Monetary Fund has said inflation date and forex crisis is pushing the Nigerian economy and other African economies to the brink. The managing director of the IMF, Kristalina Georgieva, said ministers of finance and central bank governors on the continent disclosed this to her this week. She added that most countries on the continent could raise money from the global financial markets and do not have large domestic markets to turn to. According to the MD of the Washington-based lender, the human and economic impact of the war in Ukraine has worsened, with commodity price shocks and an increase in the cost of living leading to a crisis for hundreds of millions of people. She said inflation is now higher than expected and has broadened beyond food and energy prices, which has prompted major central banks to announce further monetary tightening. She disclosed the fund would downgrade its global growth projection for both 2022 and 2023 in its World Economic Outlook update later this month. She explained that it is going to be a tough 2022 and the possibility of a tougher 2023 is quickly materializing. And in the meantime, the Debt Management Office has stated that Nigeria is not at risk of debt distress due to its $15.9 billion Euro bonds. The DMO clarified in a statement on its website in reaction to an alarm raised by Robert Sogwa, a member of the Monetary Policy Committee of the Central Bank of Nigeria. Asogwa had expressed worry over the country's rising debt, particularly the increasing accumulation of Eurobonds in the external debt component. He said, quote, "The unexplained government preference of Eurobonds at high interest cost with the associated exchange rate, the risk may likely hurt Nigeria sooner than anticipated. The escalating fiscal sector deficit with the attendant rising debt ratios are part of the weak links and the domestic economic environment," Sogwa said. The DMO stated that the Sogwa statement may have been made without consideration for the country's borrowing needs as captured in the annual budget, medium-term expenditure framework, and the debt management strategy. Explaining further, the DMO stated that borrowing needs are derived from the annual budget, while the borrowing mix is based on the subsisting debt management strategy. It added that successive debt management strategies has always indicated that the federal government preferred source of borrowing was concessional sources rather than commercial sources like Eurobonds. And now the Joint Task Board, JTB, in collaboration with the Federal Inland Revenue Service, FIRS, is set to begin what they described as a full-scale enforcement exercise on defaulting taxpayers who failed to take advantage of the amnesty provided by the Voluntary Asset and Income Declaration Scheme of the federal government. And a public notice titled Post-Vide Enforcement and Prosecution Exercise and signed by Mohammed Nami, the executive chairman of the agency, who doubles as the chairman of JTB. The tax body stated that a full-scale enforcement exercise, including prosecution, is to commence immediately on the 14 taxpayers who did not take advantage of the scheme. According to the notice, the Joint Tax Board, in conjunction with the Federal Inland Revenue Service, is embarking on a full-scale enforcement exercise, including prosecution of the 14 taxable persons who did not take advantage of the scheme. The 14 taxpayers will be assessed to tax by the relevant provisions of the tax laws. JTB advised taxpayers who had outstanding tax liabilities which had previously been declared under the scheme to pay up their outstanding liabilities immediately to avoid having the reliefs granted by the scheme withdrawn. Now, as unclaimed dividend rise to 180 billion naira in 2021, Security and Exchange Commission has disclosed its commitment to ensuring it reduces the level of unclaimed dividend to 0%. Speaking on Business Breakfast earlier, Annalise Ofonime Query stated that a lot is being done by companies and SEC to reduce the number of unclaimed dividends. She, however, stressed the need for federal government to review the CALABAR law, also known as the status bar, which says that the unclaimed dividend will be reverted to companies after 12 years.
Like I've said, there is what we call investors' education, and the apex regulators are not taking back in tax. They are actually doing much on that, having different investors forum to educate investors on this, on how to claim their dividends. They have put up the investors portal, the e-dividend portal. As at now, you can go to the e-dividend portal on the SEC website, and there you will be able to check if you have any outstanding dividend in the market. You can check for your loved ones, you can check for your family members, your deceased family members, or those that are still alive. So that is one of the things that is being done to reduce the load of the dividend, outstanding dividend or claimed dividend in the markets. So we also talk about one other thing that we should look at presently. Like I said before, that aside from the process of claiming dividend, there are other things that affect and cause this high increase of unclaimed dividend. One of them is that there is a rule in the market that after a particular time, the dividend is being declared status bar. And I look at it personally, this is 12 years after the dividend has been issued. And after 12 years, when it is not claimed, it is declared status bar. But at this point, I look at it that why do we make it a 12 years of a thing? Because if I look at like the deceased family member, the children may have been still very young. And in Nigeria, we know that the law permits them to be of age when they get to 18. And by 12, we are already saying that what belongs to their father or mother cannot be claimed. I look at it in that angle that that status bar should be extended at least to the age of, or to the years of 19 or 20. Even though the child was a baby at birth or at then, by then is of age to do what he's supposed to do, to make claim.
And in the meantime, the Nigerian Communications Commission has assured internet service providers in the country of sustainable policies and regulations that will help them remain in business and become more competitive. The NCC also called on internet service providers to ensure quality delivery of internet services for stronger and better connectivity. The Executive Vice Chairman of NCC, Professor Garuba Dambata, gave the assurance during the Telecom Sector Sustainability Forum in Lagos. According to Dambata, the National Policy on Digitization as well as the National Broadband Plan 2022 to 2025 can only be facilitated through internet service provision, and its implementation can make Nigeria compete favorably in the world economy. you.